Hey, everybody. Welcome to Market Mavericks, joined by Scott Melker and Mike McGlone. How are you guys doing today?
Great. TLT's up in general and
Good.
Bitcoin's up in general. We're good.
That is the truth of it. So I got to be honest with you, my Scott. I did go long TBT now. So I've switched sides. I've switched teams here, but just for a quick little trade. So,
That's fine. You know that Mike and we discussed this here. When I bought TLT, I was thinking very long term, almost as a hedge that a recession is coming. So I'm not going anywhere anytime soon.
nice, very nice. And Mike, I got to ask you. So yesterday we saw some weaker ADP private sector jobs numbers. The markets opened higher and sold off. Today we're right back up. Like, is there, coming from someone who's net short the market myself, is there any hope that we're finally going to see any downside?
Yeah, I think right now today just doesn't matter. It's cleansing out the shorts. In fact, it actually might be bearish for tomorrow because we have tomorrow's the action number. Today is a meh day, and it's a classic. So now we can see the shorts are weaker than the longs. They pushed the market down hard the last few days, and so now I look at tomorrow. The data might not matter so much as what people are ready to do. And I'll say right now, shorts are cleared. But the key thing I've been watching is I think this Bitcoin rally has been showing that risk on. I think it's been leading everything, honestly, and it has good reason to do that. A month from now, that reason will be over. Hoping at least. But so now it's we'll just see what that data says. And my bias is remains what I'm seeing from kind of the commodities markets. Clearly a global recessionary trajectory.
Yeah, I mean, oil's had such a tremendous collapse. I mean, that's been incredible to see the kind of drop that we've seen here. Quickly just jump on show my screen here. So this was that head and shoulders thing we talked about in the last few Market Mavericks, and we basically hit target. Even today, we're not really seeing much of a rebound, and I agree with you. I think, people said, oh, it would rise because of Middle East tensions. Oh, it would rise because of this and that, and it's honestly just gotten crushed. And so I think the big question is what is it telling us? And in that line, Scott and Mike, I guess my question is, well, if we get a weaker jobs number tomorrow, are we still rallying? Is the stock market still going to go up? Is it still bad news is good news as an environment?
I would have to say that it is until proven otherwise. If you're looking at it short term, I don't see any reason to change your bias. That's my oil chart that happens to be there. Yeah, it's pretty astounding drop from 95 to 69. I will say that there's a guy who's right under me on the screen who may have predicted that oil was going to go down.
Nice.
Yeah. But I might just go through a little run through. I'm going to show a few screens and get to oil. I think oil is one of the things I'm trying to lay low on right now because it's at a level that should be looking for a bounce. But it's at the tip of my fingertips to publish my next outlook for oil will be okay. From this level, it's basically completely dependent on the stock market rising. If we get that little dip into the end of the year, where the bears get Thanksgiving, that the bulls got for Thanksgiving, the bears get the turkey that the bulls got for Thanksgiving, then that to me is what's going to happen to crude oil. It's going to head towards those lower levels I've been looking for. But I want to start with what I think is really happening in the macro. And that's what I show you right here is we have the Fed markets, futures, Fed funds priced for about 120 basis points of ease by next year. And I don't think the market's figured out that they're still fighting that darn Fed. Chairman Powell says no, might actually hike. So this is a lesson I think the market's learned. And what I show you in this chart is you just have the 1 year spread showing 119 basis points on the lower right, and commodities just starting to break down. And typically commodities bottom a year about or so after we come off this 100 basis points. Right? The key focus is the market's priced for ease, and I don't think it's going to get it. And here's a good reason why. It's a headline I say here is why bother the ease with the S&P 500 up 20% on a 12-month basis? The last time we did that is by showing you this chart. This is just the S&P 500 kind of waving around on a 12-month basis. It's up about 20%. Yet the last time that happened in Fed funds were at current levels was right before the financial crisis. So I look at it as you're the trigger finger at the Fed. This is not, the market's doing it all for you. You don't have to add liquidity. And you probably shouldn't. Your risks are you boost the things that you created in the long term that you're trying to avoid, and that's inflation. So I want to just tilt over to what I think is the key things I'm pointing out that a lot of your viewers might not see, but I like to focus on is this crocodile jaw pattern with the WTI crude oil going down. I showed a 50-week average to filter out the noise and just show the trend, and gold going up. and Fed funds still going up. That's a train wreck indication on a global basis. The U.S. is just kind of that final domino that I think is going to tilt into recession. We think it's already started. The number tomorrow might show it's going there, particularly if unemployment pops up to 4%, which we're expecting in Bloomberg Intelligence. That's already a sign that the Psalm wheel's kicking in. And then I want to show you this one key thing I'm worried about. And I published this Monday. I tried to pull it because it's like the timing wasn't great, but it's just a key thing you got to watch out for. Bitcoin is still a high volatility asset. It's a great leading indicator. It's up this year and all risk assets are up and it's up a lot. Okay, well, that makes sense if you look back at from the future and from a value at risk model. So what happens, and stock market's up a lot. What happens when we just get that little reversion in the stock market? Now, yes, recently you can say Bitcoin's bounces pulled everything along. I think it is. So I'm looking forward to next year where you see what's happening with Bitcoin. Volatility between Bitcoin and S&P 500, 100 weeks is about the highest ever. And the Bitcoin gold cross is what I like to show you here in white. Bitcoin gold cross, I think, is going to make new highs, and it's got a high correlation. That Bitcoin gold cross has a very close connection with the S&P 500.
Interesting. So Scott, in terms of bringing up Bitcoin, we've seen it kind of pause the last couple of days, small pullback, but I wouldn't call it much more than that. Is it, in your opinion, is it consolidating for that next move up at this point?
I mean, it's hard to know. This overshot, I think, almost everybody's reasonable targets in the short term. We had this 38,000 area of resistance. You can bring up my screen. 38,000 area of resistance, 31,000. Then you had this zone kind of around 38. And then you had this obvious level at 42. If people remember why 42 was so important, when we went from the previous all-time high 20 and finally broke that, we shot up to 42 in just a matter of weeks on Tesla buying Bitcoin. You can see here that was the top. And if you kind of just look at that level, you can see that 42 is sort of the top and bottom of almost every support and resistance that you had throughout that entire sort of bull market transition to bear market. And now we just broke right through it. Right. So, I mean, I think you can look at Bitcoin, every time we have one of these top to bottom cycles, it almost always hits the 61.8% retracement, or you can call it the 61.8 to 65% area, the golden pocket. That is right here around 48 up to 50. If you look at it, if you go back through every single cycle, top to bottom, at some point in the cycle, by the way, before it goes way back down, it generally tends to hit that sort of golden pocket right here. So I could see this pushing up to 48.50. But man, we were already way over where I thought we'd be going at this point, to be quite honest. So it's hard for me to really, get very excited about much higher targets in the short term. I still think we have the existential risk of a Bitcoin spot ETF rejection. I know that it's so priced in that it's going to happen, and all signals do look that way. But just my contrarian mind has to prepare me for the chance that that doesn't go our way, even if it's only, in March or April instead of January. So I'm just watching to see at this point what's going to happen with the ETF. I do think it will be approved. I think we'll go way up at that point. But then I think at some point we're going to need some retracement, man. I want to see resistance retested as support, and we haven't been seeing it because it eventually does get retested as support.
Yeah, and I think one of the things that keep popping up to me is I think what's going on is no one's willing to sell right now and take profits because they're all waiting on that approval. I mean, At this point, you have 90% odds that it happens by January 10th. So if you're someone invested in Bitcoin, why would you sell ahead of that? But the question then becomes does that correction you're talking about, that retrace, once it gets approved, do you then see people saying, oh, okay, now it's done. Now I want to take profits. And then we see that retrace back to the downside.
Yep. Yeah, I don't think that's an unlikely scenario. Can I ask you guys what you think about gold, Gareth? I really want to know. Mike, you talked about gold going up, but this is the mother of all rejections that maybe I've ever seen on a chart ever. Yeah, that's obviously the weekly, so it's not confirmed. But you look at the daily, you had this massive range. Obviously, it was trading in from the 2020 all-time high, came all the way back down. It got swept there one time, right? The high came all the way back down to the 1800s. Now we sweep that new all-time high and that range and close a candle that looks like this. Are we still confident that gold is actually giving us a signal to the upside? That's as ugly of a topping candle through the most key resistance I've ever seen.
It's noise. It's for traders. It's for traders to have them lose their hair. As you can see, I've done that. And that's why I enjoy looking at it from standpoint watching traders beat themselves up. What used to be me, used to be my customers. And I see that's what you're supposed to just ignore, those little things. And for traders, sure, rip it apart. But what's going to happen in gold is it's going to frustrate the most people, like markets do. And before you know it, that $2,000 is going to be way far away below the market. We'll be pushing towards 3. It's just a matter of time. It's already done it in virtually every currency on the planet, except the strongest currency is the US dollar. So it's just a matter of time. And I think the key trigger will be when the US stock market has just a little bit of decline for normal recession, interest rates go down. So the way I like to describe gold is one thing I really had to do a lot lately is really re-dig into the history books and relearn or learn the stuff I forgot. And that is, gold reminds me of what I heard Roger Babson said. He was an entrepreneur and the founder of Babson College in 1929, right before the crash. He said, I will repeat, he was very bearish stock market. He said, I'll repeat to what I said to you the year before at this time and the year before that at this time. That's my view on bullish and gold. I've been saying it for too long. It's so most gold bulls get the frustration. Certainly those who like to be long calls and get hammered on time decay, which used to be one of the things I did wrong. I used to do like ratios and 1-by-2s a lot, but to me, it's just a matter of time that it converts 2,000 support, gets to 3,000, just like it did from 08 to 11, 2008 to 2011.
Yeah, and I just wanted to kind of back up to what Mike was saying, but in a more like on a technical basis on the chart. So what to me ended up happening here, and this hopefully this helps explain a little bit. And by the way, it's still technically that level is still resistance, right? So as a pure technician, until it's a really broken and confirmed above, it is still resistance, right? We know that. But what we saw on Sunday night when this happened was, so when the futures opened, the gold futures opened at, I think, 6 p.m. Eastern time. And essentially that's very thin volume, like literally no one's paying attention. Most people are still with their families, and it upticked and broke that previous high. And my guess is it triggered stops, which then in light volume were covering the shorts all the way up. And so really this is a 10-minute chart. So you basically made that entire move up from that one day in a matter of about 20 to 25 minutes. And then I think once people saw it, they're like, oh man, sell into that. And you saw profit taking and so on and so forth. And it kind of returned gold back down below that line. But again, very thin volume right at futures open. And again, over a very short amount of time caused that pop. But I think at least in the near term, it does make a lot, not Mike, not myself, but a lot of people in the short term, it does kind of say, wait a minute, what's going on? And that even could, honestly, that could even be fueling some of Bitcoin as well, the strength of Bitcoin.
It's an all-time high with an asterisk.
Yeah,
all-time high with an asterisk.
That's right.
Mark McGuire
right there.
Well, I like to point out that's a clear point that's different this time in gold. And I've been saying it for a while. I'll keep saying it. You really can't be in gold anymore without some Bitcoin in that space, or the risk of missing out in this digital revolution is too significant.
Yeah, I agree 100%. So let's talk about the S&P. All right. So if we take a look at the S&P, we've seen it, again, for me, I'm looking at this chart about a week ago, we had this day where we gapped up and we reversed closing at the lows of the day. And then the bears kind of began to gain a little control. And then we went right back up. Yesterday, same thing, ADP comes out weaker. Markets loved it. And then they sold off. Today, we're right back up there in this level. So I guess my question to you guys is, well, where's the next move? Like, are we just, I guess we have to go, the trend is up. So you assume it's up until what are we looking for? Like, when's the change happening? Is it January or is it just indefinite at this point?
I mean, for me, it's a really tough question because you have SPY here, obviously very key resistance right here at 459. And that's sort of what we're pushing against. And it really does look like we're consolidating up against it, right? Just making higher lows into that flat top. That to me looks like it wants to pop. And then what stops it from going to 480, which is basically the all-time high, right? This is on SPY. Now, I would have said, hey, what's my signal that this is breaking down? I don't know, breaking down the 200 MA, losing it, testing it as resistance and dropping, and then it popped right back above. Then it passed through the 50 MA like it was nothing and flipped it. So right now, I'm not seeing anything on a chart, and that's very specific to a chart. I agree with all of Mike's cases for why this should be happening, but on a chart, if I pull this up naked, no bias to what's happening, this doesn't look like something that's giving you any clear signal that it wants to drop.
Yeah. What about you, Mike? What do you got for us?
Oh, I got to show you my screen. I love the macro in gold. It's so favorable and it's so simplistic, and that's what I show you. If you look at that per ounce price of gold, overlay it with the S&P 500, going back to 1971 here, I'm going to go back to 1990 to show the recent. Every time the per ounce price of gold is below the S&P 500, right now it's about half, less than half of the S&P 500. You get a recession, you want to be long gold and not long S&P 500. Now, long term, you always want to hold human ingenuity. That's what you get in the stock market. You ain't getting that in the gold. But right now, you can see on this chart what I show you is that's gold and S&P 500. But the leading indicators below, and the little bar that shows when you get recession. The key thing I like to point out is sometimes a lesson I've learned, having been an ex-trader, sometimes I'll put markets on my DI list because it'll just chop me up. By DI, I mean deliberately ignore. And that's what I'm looking at the S&P 500 right now. But I look at it from a background is if that market is down at the close tomorrow, after we did this today, depending on how much, it's a go with trade, particularly if it's down. Now, if it's up, I don't know what to do with it. But if it's down tomorrow, after the data, after everything I see, after this time of year, it's supposed to be up. It's going into, it'll be like the market will have got less than the signal that I don't know what the data is going to be, but I think tomorrow's a go with if it's down. And
so
that when you could be a trigger for gold.
Does it need to be down 1%, 0.5%, or it doesn't matter?
I don't know.
If it's a red day.
I don't know yet. Yeah, obviously a couple ticks don't matter, but if we're down as much as we are today, it's just a classic. Oh, we just covered shorts. The big picture is people are going to accumulate more treasuries. The thing is, they haven't been accumulating gold. They haven't started doing that. ETF flows have been out. At some point, they're going to go into ETF. Inflows will be ETFs. What's been offsetting is central banks. The deepest pockets on the planet are buying gold. So that's what I like to say is that ain't going to stop until prices are too high, in my view. This is usually what it takes. You just got to get priced out. And that's what usually squashes that demand. Now, it brings on recycling, but that's a key difference about gold for all commodities. You've seen that happen in crude oil. The higher price cure will crush crude oil, and it did, and it is, but it doesn't do that for gold so much, particularly after this market. It's just one of the best patterns I've ever seen from a pattern recognition standpoint. Triple tops, just break out. Cocoa actually did that a little while ago, and cocoa's breaking out too. Multi-decade
It's
highs.
also not a double or a triple top until it breaks the swing low between those. So people talk about triple tops. Just simply hitting the same price point does not technically make for a double or triple top. It's a huge misconception. Yeah. You actually have to break the low that's between all of those tops to confirm it, at which point it's so late, it's very difficult to trade. You're really talking about a massive, massive drop after that.
But I like to look at it from a standpoint is you guys are great at getting into the nuances of the shorter term. I like to look at it as, do you want to be overweight or underweight in this environment? And I look at it, you should be overweight. History tells you should be overweight gold and underweight equities. And so far, you haven't lost much money doing that this year. You're up about the same. In S&P 500 wise.
Do either of you guys have any thoughts on like, where you'd want to be? Like, let's say you have to take long exposure, obviously, gold, Bitcoin, but in terms of equities, is there any place you feel comfortable in 2024 being long? Like, are there foreign markets that look interesting, or is it just kind of like there's too much risk being up here?
I view it as extremely risky. And listen, like you said kind of before, I like all the coin trades. I think that SPY could get all-time high upside, but like for me, this is more of a ride my existing portfolio that I've never touched situation than actively try to buy at this point, right? So gotcha. I find this, you guys, even Gareth, I know you trade all day. I find this an exceptionally difficult environment to aggressively trade because in one year on one shoulder, I've got Mike's arguments, which all make sense. And on the other shoulder, I just look at the chart and things don't seem to want to go down for any rational reason. So I'm not aggressively buying stock, but that said, I still dollar cost average in my IRA into SPY like I always have. And I'm not going to stop that. And frankly, if things go majorly down for the next 5 or 10 years, that'll be a huge boon for my dollar cost averaging, because by the time I care and I'm 65 years old, we'll be way back up.
Yeah, very true. And I think that's a great point in that that's one of the things. And you're right. It's been a very tricky swing trading environment right now for me. Day trading, you still, you're in and out so quick that you can still find opportunities. But there is it's a frustrating one when the market gets to these points where it loses the logic, right? So a technical trader is all about when this happens, this should be the result. And right now the volume is very thin and the markets, again, have that underlying bid. So it is very, very difficult. So what about you, Mike? Is there any place where you would even consider, like, what about foreign markets, China? I mean, I don't know. What do you think?
So I'll repeat what I've been saying for most of the year. That good old U.S. government 2-year note, for a while at 5%, a little bit below now. I think for the next 2 years, you guarantee almost 10% because it was around 5%. Still almost going to get that. Is still a giant black hole for risk assets. I think The market's the most overdue for a bear market since periods similar to the peaks in 29, the peaks in 87, peaks in 2008. 2000. It's just so overdue for just a simple little bear market. So let's just say if we just retrace 50% of the Nasdaq's rally next year, oh man, what does that mean? The tilt is towards complete global deflationary recession, because they're doing that now. So I look at it, it's time to hunker down and be willing to miss out. Let's look at it this way. I'm actually coming down to about 6 months. If we continue to appreciate in the equity market 6 months from now, by mid-June of next year, we're still doing this, we're not into that recession, and the Fed's, we're all fine, then I'll probably start giving up on that outlook. But I think this is the biggest reset of our lifetime, and it's just getting started. Some indications are, go ahead.
No, I was just going to say, will the reset occur? And this is because I agree with you. My only question is does the official reset where things bottom out occur later in this decade, kind of coinciding with the 100-year cycle of the Great Depression, or is it something that is going to be much quicker and we'll get through it by then?
The answer is yes. No clue. I look at it one bridge at a time. The bridge right now is, notably, I've been wrong on risk assets this year, right on what's happening in commodities. Clearly deflationary trajectories. Obviously, Bitcoin and GBTC were way too cheap a year ago, but the opposite is the case now. The market's completely accepted and leaning towards a soft landing, and the Fed's going to ease. Where's your tilt there as a trader? It's definitely not with the consensus. Your tilt, your optionality is we get a normal little pullback of what we've done this year. And that means TLT, I think bond yields, gold will be some of the best investments. The fact that gold's kept up with stocks this year is quite impressive. To me, that's just showing that matter of time. And I don't know how it's going to work out, but that's the first bridge. Let's get through that first bridge and we'll see. But let's just end with this. The histories of the book, The Boom and Bust, and that's one particular one, is when you have the biggest pump in liquidity ever, an risk assets rise on that, and then you pull that liquidity, risk assets decline, typically you get reciprocity to that rally and those actions. And to me, this is barely getting started. So hopefully it won't happen, and hopefully I won't have to write that in the textbooks. I can write in the textbooks it was actually different this time. I'm looking forward to being able to do that.
Scott, in terms of going back to crypto, are you seeing that? Do you think that the altcoins? So we've seen Bitcoin kind of be making new highs, and altcoins kind of had their run prior to Bitcoin. First of all, is that normal for a normal cycle? Is it usually altcoins lead and then Bitcoin follows? And then are the altcoins done, or do you think they're going to have another push here in the next couple of weeks?
I think it's been the opposite, actually. I think Bitcoin has led and altcoins have followed. It's just a chicken and egg where you start. But altcoins, obviously, the altcoin market was devastated through the entire bear market. And even as Bitcoin laddered up from 17 to 20 key levels, 20 to 25, 25 to 31, altcoins were still getting destroyed. It took actually Bitcoin getting up to about 35 and stabilizing for us to really start to see the excitement in the altcoin market, which is just absolutely boomed. But very select altcoins. It's not everything like it has been at certain alt seasons in the past that people talk about, right? This is Bitcoin dominance. I think it's a bit of a joke to actually chart it personally, but it does show you the relationship and where the liquidity is going. You saw we had this as Bitcoin went way up, all the way up to 45. You saw that altcoins versus Bitcoin, they still go up in dollar terms because Bitcoin's carrying them. Altcoins versus Bitcoin were getting smashed. Now we stabilize. And because we're stabilizing in what people view as a bull market, they see, okay, Bitcoin's boring now, back to altcoins. And then you see Bitcoin dominance drop. So I think actually as long as Bitcoin is generally trending up, when it goes sideways is when historically in cycles, and at the moment, it's not even anecdotal, what happens is the liquidity flows back to altcoins. People get excited. Then when Bitcoin starts to move, panic ensues from their altcoins. They sell their altcoins quickly to get back into Bitcoin, and the washing machine continues to tumble. That was a long way of saying as long as Bitcoin doesn't crash, I think there's a lot more gains to be made in altcoins as it pushes up or even just goes sideways.
Do you think, and this is something I was thinking, do you think that there's any, did probabilities of the approval of the ETF, the spot ETF, take any sort of minor hit based on Jamie Dimon's comments yesterday that he thinks the government should ban all this stuff, or is it just that's white noise at this point?
Jamie Dimon was playing to his audience, and his audience was one person, Elizabeth Warren, who is the most critical crypto person there is on the planet and the most powerful senator in terms of banking and finance. He'll say literally whatever he has to say, regardless of whether it's what he believes or not. But you can watch what they do and not what they say. First of all, if we're talking about it being for drug traffickers and criminals and terrorists, well, go look through the $39 billion in fines, 270 something fines that JP Morgan has paid over the years, including $280 million recently to the victims of Jeffrey Epstein, a few billion for all the money laundering that was happening there since the 1980s. These are the banks that are literally used for the crimes that he's committing others of. It's like, look over there so you don't see me doing it. But the flip side of that is that JP Morgan is massively, massively, massively invested in crypto. The thing is, they're not invested in the public side investable assets. So it's actually to their benefit to kind of crush the crypto industry as it is so that they can centralize it and institutionalize it and bring it to private blockchains, right? He can say whatever he wants. JP Morgan Onyx, their own platform, is tokenizing BlackRock money market funds, sending them to Barclays, doing $2 billion a day in transactions. So they're actively using this. They know that this is the future. But to be very clear, they want it to be a controlled future and not one that happens on Bitcoin or any public blockchain that we are all bullish on.
That makes sense. And so the idea being is that, JP Morgan has a vested interest in maintaining control of the financial system because that's how they make their money. If all of a sudden you get the decentralization, then they're shit out of luck, kind of thing.
Yeah, it's just the hypocrisy is just so thick. It's incredible.
So just turning one last question to you guys. I got a chart here, and this is my new TLT, Scott. So I'm down on it right now, but I'm a fighter. This is natural gas. And so natural gas has had this big collapse. I have a technical level. Mike, I'm afraid to ask what you think of natural gas, but granted, I'm a much shorter term trader, but do you have any views on it?
Yeah. Strong views.
Run away.
Stuck between two and four until the cows come home. Typically the way gas trades, that kind of bounce you had last year, that high velocity up to 10 and the drop right back to 2. Is indicative of what natural gas and commodities that have strong elasticity supply and demand do. And it's also indicative of that severe deflationary trend. From a trader standpoint, you just trade that range. The fact that we've already spiked into December means that summer rally might be over. And all these people are looking for natural gas to rally last year. I do like to use the quote that, we do have global warming in the winter too. And you have to basically bet on the weather now. But it's a pretty steep contango now, which is normal for gas. But here's a key thing I like to end with in gas. It's the number one measure of heat, electricity, and fertilizer in this country. And this year, it dropped 80% from last year's peak to the price it first started trading in 1990. So when people say things like inflation, CPI, and PPI are not good measures of inflation, like look to that key measure. That's severe deflation. Yeah. The only reason it's heading up is because the dollars that it's priced in are much less valuable than they were. What was that, 33 years ago?
Yeah. Wow. All right, so I'm gonna, at least as a trader, I'm just playing for a bounce. So we'll see if I can get that with maybe a cold spell coming up or not. But all right, what else? Do you guys have anything else you wanted to bring up? I mean, we're coming right to the end, but is there anything that I'm missing out on here today?
I mean, I'm also watching crypto adjacent sort of stocks. I love Coinbase still here. I'm looking to buy more on a bounce, hopefully down to about 116 if we get a bit of a retracement, if Bitcoin pulls back a bit. But I'm very bullish on Coinbase long term. I literally have bought all the way down. I'm finally in the black on Coinbase after all these years. So it took a little while.
Wow.
And to that end, I think if you believe in Bitcoin, looking at some of the miners that are a high beta obviously is really good. I had bought Iris Energy kind of down in here because of a conversation with Mike Alfred. It doesn't hurt that you're immediately up from like $3.55 to $6 in a matter of days. So that will keep me bullish. But I think if you are bullish on Bitcoin, you can take a look at miners and Iris Energy in particular. The reason that Mike sort of fed this to me was that when they were actually priced down in this area, the price of the stock, their total value was less than just the hard assets that they own their actual infrastructure. Like they own their own data centers, they own their own miners, they own everything, and literally were valued less than the value of if they just sold off their assets. So that's what kind of convinced me to jump into this, even outside of the core business and believing in Bitcoin. But this is one of the few miners I think is well positioned into the halving when things start to get ugly.
It's a great point you're bringing up because you essentially using a little bit of this fundamental like logic behind it. And there was a trade that I had that was the same thing, and it was on Southwest Airlines, right? So Southwest Airlines was in this insane selling pressure. I mean, just like nonstop down, and it came down into the double bottom from when the lows of COVID. And in my head, I said, okay, well, it's a double bottom, so it's technically sound. I mean, that's what you're looking for. But also, you're hitting a level where literally people were like freaking out that the world was going to end and no one was ever going to travel again. And so
Right.
logically speaking, I'm like, wait, so what does the world look like now? Wait, it's not like that. It made sense, and you can see the result. I mean, just incredible bounce from 22 all the way back to 29. But I think that's important for investors to know is like you have to use that logic sometimes. That's what can carry you through from something that looks scary to actually being a great investment.
Yeah, that's a savage chart right there. And what great rationale. I mean, literally people thought that a plane would never take off the ground again when it bottomed last time.
Yeah, incredible. All right, Mike, what do you have for us? Last word for you, Mike. What do you have?
Yeah, I'll just show my screen. To me, the key thing to be tomorrow might be a trigger for the macro trade kicking in, following what's happening in commodities. That is, if the stock market's down, S&P 500, let's say it's down, whatever it's up today, that's going to be a pretty significant go with signal for this time of year. It'll probably carry through the end of the year. I think that's a good go with trade. Now, if it's up, if the S&P is up 500, I think it signals it's probably going to go assault those new highs. So to me, tomorrow's a key number, a key data. And I'm watching. My bias is the big trade is if it goes down, because if it goes up, it's just a matter of time that the Fed's not going to ease. There's no reason for them to ease if the stock market's still going up. It's things that market hasn't figured out yet. Those days are over.
Gotcha. All right, guys. So I think just make sure you go follow all these gentlemen on Twitter. I know for sure. I know, Scott, you have a YouTube as well. And yeah, thank you guys for joining. I love these conversations. It's a breath of fresh air. And I think people watching feel the same way. So have a wonderful rest of your day, and we'll see you